So what's your early read here? Because there was a lot of worry, and I know you were at the center of the action trying to help restore stability in the U.S. banking system. What's your read on what we've heard so far today?
So, Sarah, like you, I've been paying attention to the reports from various companies throughout the economy, and I think that what we've heard from the banks in particular is what we've been saying over the course of the last few weeks, that the American banking sector is resilient, and that the actions we took a few weeks ago helped to reassure the American people that the government was willing to use our tools to make sure that we protected that system. And we look forward to seeing how banks will provide credit to the broader economy to make sure that the economy continues to grow and produce the robust jobs that we've seen over the course of the last 2 years.
Definitely signs of stabilization, not just in the share price and some of the read-throughs, though. You know, if you look at some of the Fed balance sheet data, which was out recently, we continue to see a decline, but still a very elevated level of borrowing from the discount window, from the new emergency facility created. So it's not like all clear, is it?
What I would say is that the situation has stabilized, and what we've seen in terms of the data that has been available is that people have started to return liquidity back to those facilities in exchange back for their collateral, and the deposit levels have stabilized. And in some of these banks, you've seen deposits actually increase over time, so that they're in a position where they can continue to do what banks do, which is provide lending and credit to the economy.
Are you worried about the tightening of lending and what we're about to get from the regional banks in the next few weeks on that front?
So, Sarah, as you know, it takes a while to see the data, but we haven't seen meaningful tightening. And I think the information that we garnered today from earnings left us with the impression of what we know to be true, that demand in the economy remains strong, and that overall it's the consumer demand that drives a strong and robust economy. And as long as that's the case, you're going to end up in a place where you're going to have banks in a position where they're going to want to extend credit to businesses that are growing going forward. So we look forward to seeing the rest of the earnings season, but fundamentally feel confident that the economy at its core is continuing to robustly produce jobs, and also that demand remains strong, which will help drive a strong economy going forward.
Wall Street's obviously been wrestling for months now about what the future holds regarding the debt limit, and there are some reports that maybe the House Speaker offers a one-year extension in return for some concessions. I mean, I don't expect you to get in front of that too much, but is it being talked about today, this idea that we might get some formal proposals moving?
I'm not going to get ahead of it at all, but what I'm going to say is that what you know to be true, Carl, which is that it's critical that Congress lift the debt limit. The last thing we need is a manufactured crisis in our country. I'm right now in the midst of meetings with finance ministers and central bank governors from around the world, who are all complimenting the strength and resilience of the U.S. economy. The last thing we need to do is to have a manufactured crisis that would take away from that confidence that the world is showing in the U.S. at the moment. It would slow down the momentum that we have, and we hope that Congress does what it needs to do and lifts the debt limit.
I'm curious about those meetings you're having. It's IMF week there in Washington. I was there, and everyone's in town, the central bank governors and the finance ministers, and there's some gloom as far as the global outlook is concerned. The IMF warned about it this week in terms of what they expect for the global economy. And I'm wondering if the U.S. is still the beacon of growth in the world economy, given that some of the problems and the biggest risks to the system are now emanating from our financial system. What are you telling your counterparts?
So, Sarah, I characterize it differently, and my counterparts do in the meetings that we've had. Fundamentally, the actions we took a few weeks ago mitigated those risks by making sure that we've made clear to depositors that they would be safe, and the facility that the Fed created also provided liquidity. What we've seen since then is we've seen healthy job numbers in the United States. We've seen the CPI data that's come down. We have to make more progress on inflation in the United States, but the idea that we're continuing to create robust levels of jobs while inflation is coming down speaks to the underlying resilience of the United States economy. And while there are headwinds, and we all face these headwinds not just in the United States but around the world, be they Russia's invasion of Ukraine or the post-pandemic supply chain issues, what we've seen since the IMF released their report in October, when they called for the world economy to slow, is that because of the actions that policymakers have taken in the United States and Europe, around the world, we've actually seen the global economy outperform the IMF's predictions, and that's what I expect to see again this time.
You know, Wally, we had Warren Buffett on our air earlier in the week, and one of the things he said, someone who knows banks well, is that the structure and the way the FDIC is financed is not well understood in this country, and it kind of led to people being perhaps more nervous or even panicked than they needed to be in the month of March. Do you think that does there need to be some kind of education / marketing push beyond just seeing that gold plate when you walk into your branch?
I think it's important that people know that if you have insured deposits in this country, that the FDIC has an insurance scheme for dealing with that. But I think even more important at the moment has been the what we've done when it came to Silicon Valley Bank and also Signature Bank, where because we saw the underlying potential that depositors would leave institutions throughout the country, we used a systemic risk exception, the Fed, the FDIC, unanimously amongst their boards, to send a clear message to the American people that your deposits of any size were going to be safe.